Indian investors seem to be a worried lot looking at the way the macro setup is posing several headwinds ahead of them, including the rising geopolitical tensions, data points on inflation, tightening liquidity and impending interest rate hikes. With Budget 22 and RBI policy now behind us, what's the best way investors should look at rejigging their portfolio to generate alpha in an otherwise turbulent investment scenario? Sakshi Batra in conversation with some of the top voices from stock markets and personal finance to find out where money will be made in 2022.
Hello and welcome. You're watching the BT Brainstorm Budget 2022. I'm your host Sakshi Batra, and with me on the show is an esteemed panel of experts to discuss what are the emerging opportunities for investors at the backdrop of Budget 2022 and ahead of the brewing macro headwinds. What is the SIP mantra that you must follow? How should you save, invest and prosper? With me on this panel, I have Mr. Feroz Aziz, Deputy CEO at Anand Rathi Wealth, market expert Ajay Bagga, and Swaroop Mohanty, CEO Mirai Asset Global Investments India. Thank you so much, gentlemen. Appreciate you really taking out time for this discussion. I want to kick start by asking all of you first about the macro backdrop. First of all, starting with Mr. Bagga, first you. Do the macros really play any part while selecting stocks and investing? How do you really analyze the current macro headwinds that exist? Is there still an opportunity to buy despite the kind of global scenarios that are emerging?
Yeah, definitely. It's an opportunity to buy. Secondly, for an individual investor, no matter how much their net worth, from a ultra HNI to a retail investor starting off, when is the good time to buy? It is yesterday. When is the second good time? It's today. So ignore the noise is what we keep saying, and keep on focusing on your asset allocation, your financial goals, your time horizon, and just keep investing. That's the very simple mantra. It is simple, it's not easy, and very few follow it. The good news is 5 crore SIPs in India now. That is helping us withstand withdrawals by FIs, and for the first time Indians are really participating in the growth of this economy. So I would hope that this 5 crore SIPs go to 20 crores and we have so much money coming out into the Indian markets that we really don't look at the FI numbers. That's just a footnote which gets reported once a month.
Absolutely. Feroz, let me bring you in at this point in time. Help me understand, how much do you think macros really matter when it comes to individual investment decisions, both locally and globally? And just like how Mr. Bagga pointed out, do you think this SIP number hitting an all-time high will continue to remain robust, and we'll see soon that 20 crore number coming in despite the macro headwinds?
Hi, Sakshi. I think if you break that down into two parts, macros are very, very critical. But incremental changes, delta X, positive, negative, is irrelevant. So if you ask me how important are macros, I would say 10 on 10. Changes in macros, which is what each budget or a meeting of the RBI and giving you their stance on interest rates, that's change in macros. That's not macros. So macros are very important. Change in macros are not very important in the long run, because there's a strong correlation between what you make money in and the macros in the long term. In the medium term, markets are corporate earnings dependent. In the short term, they're news dependent. If an investor is looking at 10 years and looking at news, then he's looking at the wrong variable. A trader looking at news is brilliant. So that's point one. Point two, I think it's very important for a person to understand that the FII correlation to Indian markets has reduced considerably. The correlation of FII, if FII bought, markets would go up. If FII sold, markets came down. That's what I mean by correlation. In 2011, there were only 38 days when the market behaved opposite. Last year, there were 109 days in the 241 days where markets behaved opposite to FII action, which implies that the domestic flows, like Ajay sir said, have a large implication to where the market is headed.
Absolutely. Swaroop, let me get you in here. How are you analyzing the macro setup, the rising inflation, oil prices, interest rates, and the geopolitical tensions, global markets volatility? How do you really see this scenario shaping for the Indian investors?
Sakshi, thank you for having me. You cannot isolate yourself from what has happened into the world to all of us in the last 2, 3 years. And when you shut down the globe for 2, 3 years, the ripples will be there. And then to isolate yourself from that is actually living in a different world. When that happens, there will be changes. And then these changes can be viewed as an opportunity or as a threat, whichever way you look at it. When you look at a portfolio construction purely from an investment manager perspective, a portfolio construction is formed of 60 to 70 stocks. Some changes then give opportunities for new stocks to enter. But at the end of the day, if you look at what is common to this large SIP figure looming, and then they having good investment experiences, they remaining invested in the market. So that is key. I mean, if you are choosing a fund manager to build your portfolio for yourself, leave it to the fund manager to navigate himself or herself through these changes. And yes, these changes are real. When you look at US inflation at 7.5, something which probably 2, 3 decades have not seen. The effect of that will come to the world, and to say that India will not be affected by that will be not correct. So it is a known sort of phenomenon. It's not something which came out of the blue. And from that perspective, I keep on saying that thanks to COVID, India now gets into a very favorable position. And one should always remember that and look at markets favorably from here on.
Right, absolutely. Mr. Bagga, let me ask you, has anything really changed in your approach to your portfolio post the two big events that we've just witnessed domestically, both the budget 2022 and the RBI policy? Now, on the budget front, we did see the focus was entirely on capex, on infrastructure push, long-term vision. So what are the top sectors that you are really focused on right now? How would you advise investors to really go about their investment, selecting stocks and sectors?
Yeah, you have the best private banker and the best equity fund, CEO. They've given very good inputs already. What I would again and again say, who made money throughout 2020? The HNIs got out in April and they took time to come back. September, October is when they started coming back. FIs came in and then October 2020 onwards, they started selling. Who made the money? It was the retail Indian investor and the HNIs who kept their SIPs going. This is actually what we miss out. There are umpteen studies of, you look at how much funds are giving, how much markets are giving, and then you see how much individual investors make. Individual investors don't make more than 30 to 50% of the market return because of trying to time. So that is what I would like to emphasize most. Right now, the sectors I give you might not be pertinent a year from now, but what is the long-term story? Long-term story is India is growing fast. We will be in the top 3 economies in another 10 years, if not sooner, on a real GDP basis. I'm not talking purchasing power will be there much faster. You look at what is happening around you. And if you don't participate in this growth, it's a huge opportunity missed. Sector-wise, inflationary times, what is good? Cyclical, domestic, or your banks will lead, auto will do well, real estate, cement, building materials, all these sectors tend to do well in inflationary times. But inflation, RBI governor is saying inflation will be controlled by the end of this year. And I would rather go with the most best data repository in the country. We can be skeptical and say RBI doesn't know its job and they're wrong, but I would not say that. I think with the base effects and where we are sitting today, inflation might be under control by this year. And we could have seen that a lot of the rate hike fears were overblown. So we are taking a more contrarian approach to all this and looking at taking small bites. I think geopolitically and monetarily, both the fears are very heavily overblown, but who knows? We don't try to time. we stay invested. That's what I would tell investors.
Okay, point taken. So, Firoz, what about you? Are you taking in the point made by the RBI? And based on that, do you think, on the basis of these four broad class asset classes that we have, equity, debt, commodities, gold and silver, and real estate, keeping in mind that the focus is not going to be too much on inflation because that we think we will be able to manage, the interest rates will remain stable. How would your thrust be post the budget and the RBI policy now? And in which pecking order?
See, I would say equities have the potential of delivering 12-14% return on the index level itself over the next 8-10 years. If 10-12%, 12-14% is made at index level, fund managers will help us add alpha of about 2-3%. That's why that becomes the first one. Corporate, if we are today the fastest growing economy in terms of GDP growth across whatever 190, 200, if this country does not deliver 10, 12, 13% return on the large headline numbers, and then have a 3% alpha, that's why that's the favorite asset class. So a reasonable skew towards that asset class is mandatory. On the debt side, if you're able to lend money to the government greater than what you can borrow a home loan, today you can lend to RBI or the government at 6.7, 6.8, and you are able to borrow money from a bank at 6.5, it's a no-brainer. You locking in for long periods of time, that's dead for you. Gold, we think it's only a rupee hedge. Gold is the only asset class I know, other than Japanese equity, of course, which has given a negative return from 1979 to 2002, below $750 an ounce for such long periods. An asset does not behave like this. So I would say it's just store of value. And then comes to real estate. I would say the last one would be real estate. Because of the huge supply. Mumbai itself has 15 crore square feet, Greater Mumbai, approved last year alone because of the concessions in terms of building premiums. So this is the order. And if somebody could marry this order with their objectives and try and amalgamate these two, we'll have a brilliant strategy to achieve double-digit inflation beating results.
Right, absolutely. So, Roop, could you add on to this and help most of the viewers understand who are thinking that since rates are stable right now and any which way the global scenario is inching towards higher rates, is it a good time to perhaps invest in real estate, buy a house, which I've been postponing for so long?
Sakshi, very interestingly, I think Firoz referred to the gold behavior. What has happened over the last 10, 15 years is the way every asset class used to behave is changed. I mean, no longer can you say that in this horizon, my house will yield me this much of returns. For the last 5-7 years, in fact, Mumbai real estate has not made money. Gold, you've seen what has happened in the last 10 years. But while at the other end, the financial assets have shown a very different way of working. The Indian is more invested in the fixed asset side than the financial asset side. We saw a reversal of trend post demonetization, and the growing SIP book is just reflecting that there is incredible potential for the penetration of financial assets going forward. So that is one recognition which we are seeing, and one has to really look for these changes, and that's why there has to be a need of a good advisor or a distributor who can stand by you through these fluctuating times. It's a great time in India as an investor because at these times you can lock into fantastic yields on the debt side. The equity market post-COVID gives you very good potential in areas which Mr. Baga said, which were not part of the portfolio before. So if I were an investor, it's good time for me. But the key is, am I staying invested in the market or not? That is the key to everything.
Absolutely. Ajay sir, if you could come in on the new age tech companies. I have asked you several times before also, but this everybody wants to know because the likes of Zomato, Paytm, Nykaa and PB Fintech, they've all seen sharp reductions in their prices in the recent times. There is a fall, and not just domestically, we are also seeing a trend globally as well when stocks like Meta crash suddenly. The question is there on the steep valuations, and this was a new emerging economy, new age tech companies where investors thought that they could have a chance to invest in early, and for a long time they could be in for a good ride as well. How should one really look at these increasingly becoming household names at the one side, but on the other we are seeing a whole lot of question on the valuation front?
Yes, actually, I'll answer it in three parts. One unfortunate part has been that profitless companies were brought into the public markets. Earlier, we didn't have it, but it's part of you are making the market more and more broader. So let it be. Caveat emptor, applies. But the reality is, if you look at the private equity funds over time, 50% of their investee companies go to zero. And it's about 10% of the companies which give superordinate results and really make very good. I mean, the biggest you can take, I will not name the fund, but a 40-year performance, they have given 12x on their entire portfolio in 40 years. You would have done better in the public markets with less risk. So that's why I would always give my money to Swaroop rather than private equity in India. The examples have been far and wide where you've really made money. The foreigners have made money. Second, looking at these companies, a lot of the valuation is intangible value. It is exponential growth. So it's a small trader sitting in Moradabad. When he gets on Amazon, he's able to sell to the world. That's the exponential growth that Amazon is giving. So all these companies are predicated on that. For me as a retail investor to understand that is very difficult. Third, don't be too tough on yourself. If you got IPO allocations and now you are 40-50% down, what should you do? One thing we always advise is get out of what you not comfortable with and ride the fastest horse that you think. Otherwise, just hold it. Remember Amazon also went to $5 in 2000. It's $3,500 now. But how many of these are Amazons and Teslas, and how many of these are going to zero? I can't say. But remember this, 1926 to now, 4% of the companies have given the market return. Which are those 4% starting today? I can't. I'll just tell you, go to a good advisor, have a very diversified quality portfolio, and you will do well. I can't pick those 4%, and no one else in the world can do that.
Right. Firoz, would you like to come in and add on that, please?
Yeah, like Ajay sir said, who's a great expert. So I personally think that any business which is not making profits, you're buying a dream. And to buy a dream, you will have to understand the dreamer's psychology and his execution capability, which comes with one-on-one interaction alone. That's what private equity helps doing, right? When a private equity person invests in a Swiggy or a Paytm or whichever company, he gets a board seat. He understands the dream and the execution plan. But in the public market, you have to be dependent on numbers. Before the numbers come in terms of profits, investing on that is being very unsettling. It's very unsettling to buy something which is still not made profits. So I think anything which is incorrect will correct itself to the right valuations. I think fund managers do a better job picking those dreams than an individual investor, like Sir said. Secondly, I think I think technology companies, there are two kinds of technology companies. India, of course, from an IT standpoint, has the highest IT export share. It doesn't imply that you can paint all the companies in the same brush. So the ones which make profits are definitely something which is rock solid part of the portfolio.
Right. Swaroop, in terms of mutual funds now, I want to ask you, what would you really recommend to all the investors among the various categories? How can one construct an ideal mutual fund portfolio today after we have seen these mammoth events, go past, and now we are headed in terms, there is a thing that, markets will be in a consolidated mode. There could be a whole lot of volatility, and these macro scenarios will be definitely posing some headwinds. So how does one go about creating that ideal mutual fund mix?
See, actually, I'll reflect from what Mr. Batra said and what Firoz said, and wrap it up in one particular sort of chronology. See, first, why do you invest has to be defined, and that's most important. Setting your goal then sets the basis of why you should build a portfolio, because if you don't know why, you will never know where to invest. 9 out of 10 times you give more importance to where you invest, and that's a mindless journey. So fix your goals. If you do not know how to fix goals, please take a qualified distributor advisor's help, but that is most important. If you need 6% return, you don't need to invest in equity, right? As simple as that. But 9 out of 10 people do not know whether they need 6% to reach their goal, and they need 12% to reach their goal. You are at a fantastic time from an investable climate or environment perspective. You have, like Firoz rightly said, if his projection of index return is say 12%, the active managers, because we charge a fee of say 1.5–2%, the least we should strive to deliver is that. which is 1.5-2% above the index. Otherwise, we have no right to be active managers. And Firoz can correct me if I'm wrong on that one. So that's an expectation one should have when you pull the active side of the portfolio. And the active side of the portfolio should be in two parts, which is the core part and the satellite part. The core part should aspire to have large companies, track record, strong companies, which will give you a basic nominal return along with a little above the index, while the satellite part is where you go in for that kicker. Now, here's the thing. In India today, because you're in the threshold of this fantastic journey ahead, you have the choice of choosing both the active as well as the passive. Because of the categorization bounding on the active mutual funds, a lot of new stories will come on the passive sides, which will be pretty good and can add a lot of value to the passive side of the portfolio. So choice is yours. You can build a full active portfolio based on choosing the right fund managers, which can give you that alpha over the index, or you can do a mix. If you're a newcomer, you can say, no, I don't understand all this volatility. Let me understand by taking the market first, by buying the index. So the possibilities are endless in front of you, and every possibility of finding a product to cater to your goal is there in the market. But first find your goal, and then you will always find something which will marry yourself to the goal. And that's how your investment journey becomes fruitful. And then make a fruitful investment journey in India, because the next 5-10 years belong to India in the globe. I'm not taking away anything from the globe's future, but I think post-COVID, the tilt is towards India. So don't discount India at your own risk is what I'll say.
Right. Firoz, would you like to add any top funds that you would have at the top of your mind that investors should definitely tick box right now?
Yes, Sakshi, of course. I think the first step of choosing a fund is, of course, goals. But after that, we did some research in terms of which categories have the largest potential to deliver extra returns.
Right.
On that basis, one surprising inference was the large cap category, which is the most popular and the heavily weighted category, had the least chance of generating an extra return. So having said which, there are 4-5 categories which you should choose from. Generally, people choose 2, 3, 4 funds in the large cap category. I would change that to only one fund, Franklin Blue Chip. This was recommended last year as well on the basis of future potential as per the target NAV concept, which we use. And it was very bad. And when we chose it, and then it has generated 12-13% alpha over Nifty and became the best one. So it might not necessarily figure out in a 5-year best performer, because it was very bad till last year. And you identify the ones which are at the trough going towards the peak. So Franklin Blue Chip in the large and mid cap category, ICICI large and mid cap. In the focused category, ICICI focused equity is a good one. In the blue chip category, Mirai emerging blue chip, Swaroop Saab's fund is of course a very good fund. On the contra fund, SBI Contra is very well positioned. If you look at each constituent and find out targets of each of the stocks, I would say SBI Contra has the largest future looking potential. So these are the 4-5 funds one can consider having in their portfolio, not looking at the rear view mirror, but looking ahead, which is why you may see numbers not being great for the past, but have packed potential to unrealize.
Right. Ajay sir, would you also go with the large caps in 2022?
No, go with small caps. When the economy takes off, small cap will do well, and always go with a fund in the small cap. Don't try to pick small caps yourself, because Sarup will pick 40 for you, and his manager will actively manage it. So small cap, mid caps will outperform. Right now, because of the fear psychosis, we are saying large quality. But as Firoz mentioned, generating alpha is very tough. And look at the size of the funds. If somebody is running 30-40,000 crores on an Indian market, it's very difficult for that fund manager to really perform. Go with the small cap, mid caps should be a majority. Normally we say 30% of your portfolio and rest is safe. But I think with this economy growing up, the way the government is putting the stepping stones for this economy, start with the small caps first and go with the funds. If you can own the entire market, there are some ETFs also, and there are outperforming small cap funds, mid cap funds. Go with those.
Got that. Ajay sir, could you also talk about cryptos now? I will ask both Firoz and Swaroop also to add on to it. But I have spoken to you before also. But now the scenario is different because the budget has actually brought cryptos under the tax realm. So how are you looking at this space? Is it getting more accepted as an asset class now? Should one really look at it? Or has this development further thrown this option out of the window for investors?
Yeah, I think where we'll go towards, on one side you have China, which has banned everything, but it's espousing blockchain and its CBDC, its digital yuan. You have El Salvador on the other side, which made it legal tender. IMF is telling them remove it. It's not worth being the legal tender. The reality will be somewhere in the middle. And one regulator I really respect globally is the Singapore regulator. Also, having worked for Temasek, I've seen them internally very well, MAS. And what they have done is nearly 100 exchanges have now filed with them to become crypto exchanges. They have made it totally open. So we should make it open. It's a asset. It's not a currency. Make sure that out of the 10,000 cryptos that come in, you are not letting the scamsters come in. But at the end of it, it's caveat emptor. What FM is very clear that they have taxed it, but they have not legitimized it.
Yeah.
RBI governor still is saying that we don't like it, and RBI is right. The governor will never want their currency, imperative being taken away. But I have seen enough youngsters who have made so much money. Even my nephews are buying 30 lakh cars, and one of my friend's daughter in London, she made 12 crores. She's bought four rent-paying properties, and she's left her job and traveling the world. So there are those examples which old has-beens like me cannot really fathom. So I'm very smiling when I talk about crypto. But I think there is some future now in the way it's got mainstream. Institutional money has come in. There is no basis to it still. It is just, and as the RBI governor said, there is not even a tulip behind it. At least in gold, you have some value to hold back to. Is where there's no tulip also. So has to be careful. What is good is small amounts are being put by a large amount of people. Bring it into the mainstream so that the money laundering and the terrorist and funding guys don't find it as a conduit. Bring it like a Singapore, make a strong regulation for it. I think that's where we'll end up with. That's my
Okay. One quick take from both, and then I'll come back to you for another very important question. So Swaroop, I'm very unhappy that somebody is making 12 crores suddenly in cryptocurrencies, and I can't choose to ignore it absolutely. What is your take?
See, there was the era of the fixed assets, then came the era of financial assets, and here is the beginning of what we call digital assets. I think Mr. Baga has rightfully said it's an asset, it's not a currency. And that's where the central bank will always debate that it's not a currency. Let's face it. If you talk to my son, he will very logically tell you what this is all about. Right, he's all of 23 and he's a computer geek, but they understand this. How it works is something which is very different to what you and I probably would understand. So for me to set off rubbishes is not fair. What I completely agree with Mr. Baga, and there's a reason for that. There has to be a legitimate framework around it. We started by taxing it, but it's a matter of time that as a country, we should have a framework, because if there is no framework to the flow of money, more often than not, the money has its own way of behaving, and you know how it behaves. So we've taken the first step, but I would really advocate that there should be a good framework around how it should behave, and you cannot ignore it anymore. That's the reality.
Right. Firoz, your take?
My take is very negative on crypto, because an asset fundamental principle is that it should add value, right? If I buy a share, if I bought a share, there are lakhs of people going to work, trying to create profits, at least future profits with these technology companies. There has to be underlying value created. That's the key attribute of an asset. As a currency, stability is the key attribute of a currency. Neither of it fits in, to my mind. It has lasted long enough. People have made money. There will be parties in Mumbai. I will not go to all of them for sure. There will be some rave parties. I can come back scratchless. Doesn't mean that that party was right to go to. So it has to find its place in terms of not having a value if it does not have an underlying asset. Lastly, I would like to say that if you look at crypto as an asset, there is a lot of anomalies which need to get corrected. So this will find its place in terms of demand and supply alone. So there is demand, there's supply. That's why it has a price. I would stay away from it with the part.
Okay, see your opinion right there, 2:1 on crypto, but we can definitely not ignore this space and how it has definitely created value for many of the people right there. But definitely we need to back it up with solid assets, and that is an important point. The other upcoming bit is the biggest IPO, the Great Indian IPO that all of us are awaiting, and that is the LIC IPO. Anytime we can expect, further steps on it, DRHP, and then the final proceedings. All of your take on how you're looking at this mammoth IPO and what kind of opportunities it can create for investors, starting with you, Ajay.
Yeah, a lot will depend on the valuation. I hope Indian citizens are given a deep discount because, I remember about 3 years back, we had made a presentation in the finance ministry during budget time when, we get called in. And I had said what Margaret Thatcher did with the privatization of the entire British public sector is what we can do here. So make Indian share owners, make a nation of share owners, and give deep discounts so that the retail investors, LIC policy holders, LIC agents, for example, can be given a preferential allotment. I think if we do that, that will be very good for the equity cult in the country itself. There will be a lot of new demat accounts opened because of this IPO. So what we could not achieve through advertisement, this IPO will create by reaching all the far-flung areas of India. In terms of valuation is what we will look at, embedded value. If you see the private listed players are 3 to 5 times. So if you have a 5 lakh crore embedded value, you would look at least a 15 lakh crores, if not more, and then a premium to the market leader. It's the biggest deal, and if the real estate is held at cost, you can't sell the real estate of LIC because it will bring down the Indian real estate market. But if you REIT it or if you InvIT it, look at the amount of value you can create by just the real estate that LIC owns. So it will be huge. It will be very good for the market. Will money go out of the secondary market in anticipation? I hope not, maybe some institutional money, but I think fresh allocations will come in because it's such a great opportunity globally for investors to come in. So I think we could get a lot of fresh investors, and I hope the retail investors are given, keep a lower limit, say a lakh of rupees, but give them a deep discount so that they are assured of profits and create that equity cult in the country.
Absolutely. Swaroop, are you an LIC policy holder, and would you be looking at adding this to your next set that you would be bringing out and investing in this IPO? Of course, like what Ajay sir said, we are already seeing some 34 lakh new accounts being opened. So that is opened a new era to investors. The whole challenge will be to whether they will actually expand beyond holding just LIC in their accounts.
Yeah, I hope and pray the powers to be have listened to what Mr. Batra has to say, because, it's the best known financial name in this country. The penetration that this name can bring about, no other name can bring about, is a reality. And if that part is, addressed, forget just this organization coming to public, which it should, and people should own it. Because if you close your eyes, and this is something which my professor had said in 1992, I'm trying to fight him. Close your eyes and think of the most prime property anywhere you go in this country, it is the LIC of India. Forget the insurance business. Okay, that's the power of this organization. But if something can be done on the lines of what Mr. Batra said, a lot can change on the equity culture of this country. That is the power this holds. So let's see how it unfolds. But yes, not holding it will not be the right thing. Everything will depend on the valuation. If you've seen what has happened to many of us, especially us in the last few months or so, the new age has given us challenges in assessing valuation. That's the reality. So we'll be a little more strict, which is not the fault of LIC. But yes, the valuation will be key at the end of the day. So how much you will uphold going forward.
Right, absolutely. Firoz, like, will being a PSU weigh on LIC going forward from here? Of course, we all know what are the challenges ahead, the way it has been investing in the loss-making companies so far. How will the decisions being taken right after dilution and the valuation front, which all of them have been talking about? What is your take?
So my take is, of course, it's a PSU. Valuation is going to be key, like Ajay sir said, Swaroop Saab said.
Yeah.
Valuation is going to be key because this kind of market cap will require dilutions by the government over periods of time. So initially, if you let people make money, there's a positive momentum to that stock, and that's when you will be able to monetize this as an asset. Of course, there's a lot of real estate, but there is an overhang of it being a PSU. And I leave it to my fund manager's judgment because this is going to form a very small part of one's portfolio. So I would not bring in a stock into the portfolio, but I would be very happy about the kind of equity culture it can bring around and the new investors it can bring to the equity side, Sakshi. But on the crypto bit, I want to just add one thing which I couldn't recollect at that point in time, is that just because all of them are doing it doesn't make it right. Okay, institutional money was backing mortgage bonds, which was the result of that was a GFC, global financial crisis, for 25 years. And all institutions, the biggest of the biggest world names were there. It still didn't make it right to lend to people who were subprime. So I might not see the fate of crypto going down to zero or negligible in my lifetime, but it still doesn't make it right.
Okay, if it doesn't happen in our lifetime, I don't have any qualms in like experimenting with it. That's, I think, what I think about it. I don't know about Ajay sir and Swaroop. I think they were already looking at that, we cannot ignore it. But thank you so much. It's been an absolute pleasure discussing all these wonderful insights with, all of you on Save, Invest and Prosper. I hope this has given enough insights to all our viewers as well on the BT Brainstorm. Truly appreciate your time on BT Brainstorm Budget 2022. Thank you so much, gentlemen, for being with us.